Hello there. Welcome to Grade 11 Accounting. In this video, we want to look at a question on accounting question and also on fixed assets. So this question is 20 marks and it requires you to spend about 10 minutes on that question. Question 1.1 reads accounting equation and it reads complete the table provided to indicate the effect on the accounting equation for the following transaction. Note, assume that the bank balance is favorable and the virtual revenue system is in use for all transactions. So on the example, we are given issued a receipt for rent received. So remember the double entry that is involved when we issue a receipt for rent received. Remember, rent received, we are supposed to credit rent received and then we debit back. So if you go to our answer section and try to see what we have according to that. So this is our answer section. So you see that the double entry that we have as an example will be entered in this. I entered here as an example. It's e.g. When we debit bank, I remember bank is an asset. We increase in assets, and then we credit rent received, whereby rent received is an income, and it's going to increase our net profit. And remember, our net profit also increases our owner's equity. Remember, when we say calculating the figure for owner's equity, we are going to say the opening balance for owner's equity, which is the opening capital, we add our net profit, and then we subtract your drawing. So in this case, as we add our net profit, as the rent received increases the net profit, it also increases the net. It also increases the net profit, and when it increases the net profit, it's going to increase also the owner's equity. So you get a plus and plus. So if you go back there, you go to the question now. We put transactions that were given there. So we are just going to go over the transactions. First one is saying one of the partners contributed a delivered vehicle is part of this investment in partnership. So what you are supposed to do? Remember, you are supposed to double enter that we have here. We are going to debit our vehicles account is the double entry, and then we credit at capital, which is the owner's equity. So remember, capital is also owner's equity. So this is what we get. So in this case now, it means as we are debiting vehicles, it means our assets also are going to increase because a vehicle is a non-current asset or a fixed asset. So I'm going to have a plus on assets. Then by crediting capital, capital is owner's equity. So it's also going to have a plus on owner's equity. So come here, we are saying this is now A, and we are having a plus on assets and a plus on owner's equity. So this is what we have. Go back and try to see what we have next. Then next we put credit note received for damaged equipment retained. So whenever a credit note is issued, credit note reduces the amount of our debtors. Remember, when you sell goods on credit, our debtors, when they retain goods, we reduce that amount by crediting the debtors account. So basically, the double entry I involved here is that this is it's going to reduce our debtors, whereby we are going to credit our debtors account. We will credit our debtors account, reducing with the amount that has been retained, and obviously we are also going to debit the discount allowed account. We are going to debit the debtors allowances. Debtors allowances. We're going to debit the debtors allowances. So we are saying here we got debtors allowances representing our sales returns. Remember, this is also represented as our sales returns. So in this case, by crediting our debtors account, we are reducing assets. A data is an asset. Remember, we are reducing assets, and we are going to have a minus on assets. And then by debiting our debtors allowance, it means we are going to reduce the amount for sales. Remember, debtors allowance reduce the amount for sales, and sales when the sales are reduced, it means the net profit is also going to reduce, and it's also going to cause a reduction in the owner's equity. Remember, we said net profit is going to affect our owner's equity again. So this is what we've. So we're going to have a negative on assets and a negative on owner's equity. So we come here, negative on assets and a negative on owner's equity. So this is our P. If we go to our C, If you go to our C now, it reads, let's try to see. Our C reads, repairs to buildings were debited to the landed buildings account in error. So these are repairs. Remember, repairs is an expense, but in this case, it was debited to an asset account, which is the non-current asset account of landed buildings. So we need to correct this error. So what we are saying is this amount is on the debit side of the landed buildings account. So we have to remove it and put it in the repairs account. In other words, we are saying we are crediting landed buildings, and then we are debiting to the correct account, which is the repairs account. So this is an expense, this is a non-current asset. So by crediting in assets, which is the non-current asset, we are going to have a minus. We should know that on every asset account, when every asset account, when you debit, it's a plus, when you credit, it's a negative. So this is what we are. So in this case, we are crediting, so it's a subtraction on assets. Then by debiting repairs as an expense, it means expenses are going to increase, and when they increase, they're going to reduce the amount of net profit. The net profit when it's reduced, it's also going to reduce the bonus equity. So this is what we have. So you put a minus and a minus again, assets and bonus equity. So you come in, just indicate as such. Remember, you're having a negative and a negative. So we're saying a negative of assets and a negative of assets. So this is what we have, guys, in terms of the correction that we are going to make here in terms of this accounting question. Remember, this is representing accounting question where we're saying assets is supposed to bonus equity plus our liabilities. And we should take note that when we have a plus this side of the equation, we're supposed also to have a plus that at the other side of this question, since they're going to, the two totals should be equal. But if the transaction is affecting one side, like it's affecting bonus equity liabilities, it's supposed to be a plus and a minus, so that the figure for this side doesn't, the total for the side doesn't change. So if it's also a double entry that is affecting assets only, it means we are supposed to show it's negative and positive again. This is what we have. So we come back there and try to see what we have on the second part. So let's try to see. So on the second part there, it reads Lulu traders, we've got the following information relates to the financial year 2022. On the required part, calculate the basic figures denoted by 1 to 4 on the fixed asset note. So we have got figures that we are given there on that fixed asset note. So we are going to start with the figure 1. So remember, we've got our cost here at the end. So this is at the end of here, and the balance we are giving here is at the beginning. So what we are saying is to get the cost balance at the end, we are going to say at the cost at the beginning plus what was added, which is the additions that cost 760,000. So you're going to say 3 million plus 760,000, and you are going to get your 3,760,000. So we come here for the other section. We are now saying 3 billion. Then we get our 760,000. And then we get our 3,760,000. So this is what we have on the first part. On the second part, which is 2, try to see what does it say. 2 says carrying value for 1 July 2020. So you have our cost, you have accumulated depreciation. Remember, get your carrying value, you say cost minus accumulated depreciation. So basically, we are saying 420,000 minus 160,000. We come here, let's summarize the side on 2. So we are saying 420,000 minus 160,000. And we calculate it as such, you're going to see that you're going to get 260,000. So the answer that we have is 260,000. So this is what we have. And then we can go to the next one, which is the item 3. Then we can go to our fixed asset notes, try to find out what we have. 3 is saying depreciation for the year. So we want depreciation for the year for equipment. So you can only get the information about calculating depreciation for the additional information. By saying depreciation of equipment is calculated at 10% per annum for the diminishing balance. So remember, when you're calculating using the diminished balance, the formula that you're supposed to employ is percentage times carrying value. Where carrying value is cost of cost minus accumulated depreciation. So first you have to find carrying value, then you can now say percentage times carrying value. So in this case, at the beginning of the year for equipment, we had 420,000 minus 160,000, where we got our 260,000. So to get depreciation for the equipment that stayed for the whole year, we are going to say times 260,000 that we got on the first on the first calculation, and then the percentage that is being employed, we are giving it here is 10%. So basically, we are saying 260,000 that we got here. Remember here, the two that we calculated here gave us 260,000. So we are now percentage, which is 10%, 10 over 100, that's 260,000 over 1, if you are going to get your 26,000. So this is depreciation for the equipment that stayed for the whole year. Then we've got equipment that came during the year. Equipment that came during the year of, let's try to see. We've got additions at 160,000. This one, and we are being told that equipment was purchased on 1 October 2021. So we want to see the number of months that it states. Remember our year. Let's try to see where our year is ending so that we can see how many months did that equipment stay. Our year is ending on 30 June 2022. So 30 June following year. So it stayed from 1 October 2021. So we're saying October, November, December, January, February, March, April, May, June. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 months. So it stayed for 9 months. So we are going to say 10% of 160,000, then we calculate by 9 months. So we are saying for the equipment that came during the year, we are saying 10% is 10 over 100 times 160,000 over 1. It extends 9 months, so we're going to say times 9 over 12. When you calculate it as such, you're going to see that the answer that we are going to get there is 12,000. So to get now total depreciation, you are now saying the one that stayed for the whole year, old equipment, 26,000 depreciation, the new equipment, 12,000 depreciation. So you are going to add 26,000 plus 12,000. So remember, on the other section, you are just supposed to put the final calculation that is leading you to the final answer. So you're saying 26,000 plus 12,000. And when you add the two, you're going to get your 38,000. So here we have got 38,000. So this is what we have. That on the last part of the question, we have got item 4, which is saying, let's try to find out what does it require. Item 4 is here. It requires us to calculate disposal at carrying value. So basically, we've got information for disposal for delivered vehicle, which is it was sold for 112,000 cash on 1 March 2022. The cost price was 360,000 rands, and accumulated depreciation on 1 July 2021 amounted to 260,000. So let's first of all calculate depreciation that we get accumulated depreciation. So this is depreciation up to 1 July 2021, but it was then sold on 1 March 2022. So it stayed for July, August, September, October, November, December, January, February, March. So it it's it's just said February, March. It was not there. Did stay March. So you have 1, 2, 3, 4, 5, 6, 7, 8. So we have got 8 months that we have that stayed there. So we are saying 8 over 8 months. This is 1, 2, 3, 4, 5, 6, 7, 8. We are saying it was there from 1 July. So it said the whole July, August, September, October, November, December, January, February. Then 1 March it was sold. So 8 months. So total depreciation of that vehicle, we are saying we're given that depreciation is 50% on cost, straight line method. So straight line method, we are going to say percentage times cost. So our percentage is 15%, which is 0.15 as a decimal, and then we multiply by the cost, that is 360, and then we multiply by the 8 months that it stayed, 8 over 12. Then try to see what we get there. So let's try to calculate that one. Let me say 0.15. You're going to multiply by 360, and then you multiply by 8 over 12. You're going to get 36. 36. It's going to be 36,000. So this is what we have in terms of depreciation. So to get now accumulated depreciation for the vehicle that was disposed, we can now say 36,000 plus depreciation that was there, which is 260. Get the accumulated depreciation now, 216,000 plus 36,000. So this is accumulated depreciation. And then I add there. So to get accumulated depreciation, if you add there 216, then you add your 36, you're going to get your 252,000. So here it means our answer is for accumulated depreciation is 252,000 of the vehicle that was disposed. This is accumulated depreciation. So remember, you are just supposed to open your disposal account so that you can be able to find out about the carrying value of that non-current asset that was disposed. So remember, on the disposal, what we are supposed to do, the cost of that non-current asset comes on the debt side, and then accumulated depreciation comes on the credit side, and then the amount of cash that was paid for that we received for that disposal come on the credit side. As simple as that. So what we are going to do now, we are just going to do the same. So we are going to say we're going to check our costs. And remember, we already have it there. It's 360,000 our costs, and then accumulated depreciation, we found it here as 252,000. And we can just recheck it. Here it's 252,000 here. So and then the cash that was received, we are given it here is 112,000. So basically that's what we are going to do. We come here, we now say we do the same. Our cost 360 comes on the debt side. This is our cost. And then accumulated depreciation at 252,000 comes on the credit side. This is our accumulated depreciation. The cash of bank are received on disposal. Remember what we received on disposal. If you come here, what you received on disposal will come on the credit side, which is our 112,000. It's 112,000. So with this case now, we can be able to compare debit and credit and see which one is greater. Then you can find the profit or loss on disposal. That is, if you want to find the loss or profit on disposal. Then in this case, the question requires us to calculate carrying value on disposal. So carrying value now, we are saying on the carrying value, we said we find it by saying cost minus accumulated depreciation. So what we are going to do is our cost, we have 360,000, remember? Then accumulated depreciation, we got it here is 252,000. So we calculate it as such, you are going to get your 108,000. So 108,000 becomes your answer. So you can just go and summarize this working. Other section where we're saying 360,000 minus 252,000. Get you 108,000. So this is what we've been supposed to this video. We'll meet again in the next video.